What's up everyone, Tom here with another video. We have certainly seen some parabolic moves on the stock market recently. In this video, we will discuss what happens to a stock market when it goes bubblicious and how we can prepare for such a situation. Have we entered bubble territory already? Stay tuned. So I think the best way to really begin this video is to discuss this heat map here. And this is a heat map of the S&P 500 and the current PE or price to earnings ratios of the big companies within it. One thing becomes immediately clear, and that is that we are seeing incredibly red screen with very high PEs, and that the old guard, as in the banks, are not trading at very high PEs. So why is this? Well, it's the nature of this crisis, but more importantly, it's the underlying idea that the Federal Reserve, which have been hard at work with those printing presses, Jerome's doing a great job, by the way, in terms of helping the economy, but instead, realistically, helping the stock markets. And what do I mean by that? Well, when you are printing money and you are effectively providing unlimited liquidity, what that does is it means risk on. We want to take risk, and more importantly, we want to buy growth stocks. We want to buy stocks that are growing, stocks that are potentially going to earn more money in the future, and that is, of course, the big FANG stocks and other tech companies. Microsoft, Apple, Google, Facebook, and Amazon. It should come as no surprise that they're trading very high right now. When we look at things like the NASDAQ, it can become pretty clear when we look at a monthly that we are seeing very large moves right now, just like we were during the tech boom. And many people have created videos about this, I know. But it's the idea of how do we know that firstly we're in a bubble, and secondly that that bubble could potentially crash, and that the stock market and Wall Street are more importantly going to take advantage of the traders within it. Well, to answer that, we need to understand the type of traders that are currently in the markets and the history of the mental psychology that goes into stock market trading. So to better understand what's happening with the markets right now, we need to go through two PE ratios. One, what has the average been? Well, the average has been just under around that kind of 15 to 16 area. Where are we right now? Well, we're trading at around 28.61. When we go and talk about the Schiller PE, which is another great PE for you to understand, and there's many videos out there covering it, we are looking at 30.78 or almost 31. Not since the tech boom and bust have we seen those kind of numbers. Now, does this immediately say that we're in a bubble or that we're going to crash? Absolutely not, but it gives us an idea and a framework to understand. What does change the game, though, is really things like Bitcoin. And I say this because in 2017 to the end of 2017 into 18, we saw one of the biggest rise and falls in an instrument for a long time. So why is that important? Well, this really is the best case study to show what a market of retail traders firstly will do, their habits, and how you can kind of predict that the end was coming. So one of the things was that I always remember that we had Thanksgiving weekend in America, and after that Thanksgiving American weekend, crypto went crazy. And I mean crazy. It was nuts. We had that massive spike up in the November into December period, and I believe a lot of that was to do with people going home, telling their family members, hey, you've got to get on the crypto train. I made 10 grand, my friend made 50 grand. We all make money. You can't lose. Get on it. And then after that, all of their family members were jumping in. I know this for a fact that was what was happening. When it comes to why and how you can tell the markets are getting to an end, well, firstly, what was happening is we were seeing a huge amount of search volume coming in. When everyone's talking about something, think about that elevator idea. If you hear someone on the elevator talking about, hey, you've got to get in that cryptocurrency, or hey, you've got to get in that stock of whatever it is, Nikola or whatever kind of Kodak the other day. If you're getting in those stocks and you hear that in the elevator, then you probably want to be running for the hills, because that means that every single person is talking about it. Here we've got the market in terms of what Bitcoin was being searched for, and it hit an all-time peak basically into January of 2018. Does that equate to the peaks of what we saw with Bitcoin? It certainly does. And of course, during the crash, usually the way you see a crash is they blow off. So what I mean by that is near the end of a crash, you will usually see two main characteristics. The first characteristics is that you'll have a big move followed by an incredible sell-off. Then you'll get a new high. That new high will continue on. It will usually hit some kind of psychological number, and then it will have a massive blow-off. And that massive blow-off will usually retrace to a fib level. And that's why I brought up this Fibonacci. Between like a 61.8 and a 78.6 fib is generally what you'll see, because people will be buying that dip, they'll be getting into the market, and they'll be pushing it higher. So whenever you're looking at stocks, that is often the way it works out. Let's take a look at Kodak together now, just because that was one that happened so recently, and I've got this drawn up. So Kodak went to around $60 here. It bounced down, and then of course it went all the way back up to the 61 kind of 0.8 fib, and then sold off again. And I very much doubt it will ever get back to these levels. It just doesn't make sense. The initial hype and kind of the money, or the easy money, has already been made. The story was told there. So then we've got to ask ourselves the question, what is going on right now in the stock markets? Are we seeing a similar trend to Bitcoin? Are we seeing a similar trend to other bubble-licious kind of markets? Well, one thing is that if you use things like this website here, which is Robinhood Tracker, and I'm sure there's many Robinhood traders here, and I'm definitely not having a go at Robinhood traders in general. What I'm saying is that we are seeing a huge amount of herd mentality. So of course, what were Robinhood traders trading? They were trading Kodak. Were they trading it for any reason other than to make money? They certainly weren't. They just thought it was funny, and they wanted to try to make money from that and be the one that is taking out the absolute maximum. What have we seen recently? A huge move into Microsoft and Apple. And when you look at the charts, especially Apple, you will see massive moves over the last week. So where the Robinhood traders are is really, really important. And it's happening throughout a lot of the stock market and other equities right now. We're starting to see bubbles and huge moves in heaps of equities up. So can we search Google Trends to find out these types of things? Well, we can't really do it on the stock market, because generally when the stock market comes in, it will be when it crashes. We can see the GFC, it started crashing, huge amount of search volume. We can see that this time into the crash, huge amount of search volume. But what I think is more interesting is when you look at things like options. Options is a great way for a retail trader or anybody to take leverage in the market. And remember, what a leveraged market means, it means that markets can go up more because people are effectively borrowing money to get in to bigger positions. Now, that's what's happening right now. So options trading close to the highest it's ever been searched on Google. We've got call options absolutely hitting all-time high searches on Google. We have not seen call options be this popular since the tech boom. So of course, retail traders are getting into it, which is cool. I love trading, and I'm all about trading and of course helping people to get better at trading. But yes, these retail traders like you or myself are really making up a huge portion of this market right now. In fact, 25% of this market is retail traders. Now, usually it's about 10%, but right now on a big positive day, 25% of daily volume is retail traders. So we do matter, and the mentality that we have will be preyed upon not only by Wall Street, but it will also be preyed upon by just the general functions of what we do as a herd mentality. So what about gold? Well, gold has been another favorite of retail traders recently. It's been another favorite of everyone in the news. If you take a look over here on the left-hand side, gold moved up super hyper and then came down and then of course retraced. Now, if we take a fib of that back in 2011 to 2012, what do you think we'll find? We'll find that it retraced to the 61.8 fib and then sold off. Sometimes they'll hit a new high, but generally speaking, usually when you see this kind of massive move where it went from $1,900 an ounce all the way down to $1,500, $1,600 an ounce, that will end the market bull. So what have we seen right now in the weekly? Well, we have not had that. We've got a massive, super aggressive market right now. We're at $2,050 an ounce. We are super far away from the 20 moving average, which eventually it will hit. And when we search Google Analytics, what is it telling us? Well, it's saying we are at all-time highs in terms of gold interest. Gold interest has never been higher than it is right now. It's hitting all-time highs worldwide. Well, I think that presents pretty much the same kind of idea. If you saw gold sell $200 or $300 an ounce, it might initially bounce, but if it ever hits one of those 61.8 or 70 fib kind of levels and then starts to sell off again down to the base, that usually means that you're at the end of that particular cycle. And that's what you want to be recognizing and trying to understand in the markets. So that'll be what I'm looking for also in the stock market right now. Shanghai Composite, very similar thing. Big moves on the Shanghai Composite, followed by big crashes. Again, very vertical markets, and it's just funny how these bubbles happen time and time again, yet no one ever learns about them. Again, Google Analytics will not help us with this particular market because firstly, Google is not really allowed in China, but also people were only really talking about it when it crashed. I know from friends in China, they were all into it and everyone was talking about the stock market though during that time, and it becomes the new norm, and that new norm is the thing that we've got to be worried about. So I want to leave everybody with this article. And this is actually an article from Goldman. I make a lot of fun of Goldman Sachs on this channel, but it brings up an interesting opinion. And that opinion is that if we see a vaccine approval, will that actually be bad for the markets? Will that take a lot of steam out of some of these growth stocks? Well, I think it could, because effectively, if we see a vaccine and we see things go back to the norm from that aspect, then the Fed are going to be wanting to turn off the tap. And at the same time that they're turning off the tap, we might see a different US administration. And then the next question will be, how are we going to pay for all of this money that we've been printing? One of them could be US tax rises. I know they're already floating that idea here in Australia. So eventually some question will be asked, how are we going to pay for all of this? And I think a lot of it will be talking about certain corporate taxes. And one of those will certainly go on to the tech companies, as those companies make the most amount of money and are well known to be paying the least amount of tax. So hopefully everybody enjoyed this video today. If you did, make sure to subscribe and of course hit that alert button. And of course, give this video a thumbs up and comment down below whether you're concerned about the tech stocks eventually getting some kind of tax rise. Do you think it's going to happen? And do you think that's going to be a catalyst? Or do you think it's just going to be up and up and up until the election? Stay safe, stay healthy, everybody. See you next time. Bye.